Welcome back, and joining me for a closer look at what's played out on the market scene today is Andrew Padoa from Sasfin Wealth. Thank you so much for your time, Andrew. We are getting closer and closer to the 2nd of April, and Trump says he will be collecting tariffs on imports of cars into the U.S. from the 3rd of April. Talk to me about what this means, and we've had even a response from the German economic minister saying that they will be coming out with a decisive response on this.
Yeah, well, thanks for having me, Zanati. But I think someone described the market at the moment as it's a kangaroo market. We're not in a bull, we're not in a bear. It just keeps going up and down, and that's kind of what it feels like with all these tariffs. It's markets are quite choppy. Look, the 25% tariffs on the cars not made in the US, clearly not great for the German car manufacturers. Look, not only they're facing huge competition from China.
Yeah.
I think in 2020, China exported under 1 million cars to the rest of the world, and last year they did 4. So the German car producers are already under immense pressure from the Chinese competition, and now you have tariffs in the States. So yeah, not a great day for Germany. But I look at VW and BMW today, and they were both down 1.5%, 2%. So nothing substantial.
Okay.
So maybe a bit of this is priced in.
All right. So, well, things might not be good for the rest of us, but things are good for the U.S. with the economy still up 2.4%. And it's quite interesting because this is happening in a time that we all have been seeing recession alarm bells, but I guess maybe not. Well, let's get into the company news that came out of the JSE. CA Sales coming out with annual results. The company really does a lot in that FMCG space, saying that the top and bottom line increased by double digits. I was surprised that it actually wasn't trading in the green, maybe because of a lack of liquidity in the stock. What did you make of those numbers?
Yeah, so it's not a business I follow too well, but looking at it today, I was actually pretty impressed. Like you said, double-digit revenue growth, operating margins up. You know, what's not to like?
Yeah.
That's pretty good.
Yeah.
What I also liked is, you know, they're operating in Southern and Eastern Africa, which are growing faster than South Africa from an economic growth perspective. But digging into their financials, you know, their revenue in South Africa grew 19%. So that's seriously impressive, but it's coming off a low base. Most of their revenue comes from Botswana. That's their primary listing, and then they have a secondary listing here on the JSE from 2022. But the Botswana business growing at 9.2%. So I was pretty impressed with these results, to be honest.
And considering also where they operate, because there's a lot of risk in those African markets, and it was quite interesting to see them saying that they still see a lot of opportunities there in Africa because they are familiar and they know how to navigate those markets through the challenges. Well, let's go into more company news. DataTech coming out with a year-end trading update today. The technology company, of course, using gross profit to measure its underlying profit. That's growing 6% from the previous comparative year. Benefiting from demand trends in the tech space. The share was up slightly, almost 2% the last time I checked. Is this just continuing momentum in growth for this company?
So I thought 6% group gross profit growth for a kind of a tech company isn't massive, you know. It's not if it was a retailer, I'd be impressed with 6% growth, but you've got real secular tailwinds behind you in the IT sector. So look, 6% is okay, but it's not getting a big surprise. What I noticed is that in South America, the Logic calls Latin America, that division was down 12% revenue-wise. So I'm not sure what's going on in South America, but there's obviously something that they need to address. But like you said earlier, this is just a trading update, so we'll get more information on the 27th of May.
All right. Well, we've had more information coming out of PPC saying that the board has approved the construction of that new cement plant in the Western Cape. Of course, this has been in the news for quite a while. It's just that now the board has actually approved it, and investors did pay attention because that share did surge 8% in morning trade. How game-changing will this be for PPC?
Well, a 3 billion rand capex development is no small, it's not just building a little house. This is a proper project. So they clearly believe that there's massive demand ahead of them that they require this capex spend. So no, this is positive for the company.
Yeah, indeed. And considering the infrastructure investment that the government has committed to, hopefully that can
100%.
come online and they can benefit from it quite soon. Let's go into property. Sirius coming out with
Yeah.
yet another announcement of an acquisition. This time it's an acquisition and a disposal. Acquisition for a business park in Germany and disposal for office space in the UK. Also, some buying activity coming through there as it was trading in the green. Is their strategy just working for them at this point?
Yeah, serious. They just keep doing their thing, selling properties at a premium, buying cheaper properties with great yield potential. So this deal, I think it was a just over 8.2% yield for the acquisition. Andrew Coombs, the CEO of Sirius, he's an ex-military and served in the Cold War, and he's
Okay.
factoring in military storage to all their investment decisions in the face of what's going on with Russia and their aggression. So Germany's spending 600 billion euros on defense. That is a massive amount of money. So
Wow.
where are the drones and the ration packs that feed the soldiers? These need to be moved and stored somewhere. So, and earlier this month, Sirius bought a business park in Southampton in the UK, and it was
Yeah.
a former ammunition depot. So the
Ah.
reason they bought this is the ability to, store heavy military equipment. So I like Andrew Coombs. He's thinking out of the box. I don't know
Okay.
how many other properties are kind of thinking like this.
Yeah.
So yeah, let's see how it plays out.
That is so interesting because we even had the finance minister from the UK yesterday in her spring statement talking about an increase in defense spending in the
Yeah,
UK. So very, very interesting developments happening there.
yeah.
Let's take a look at your stock pick for today.
Sure. My stock pick tonight is TransTime. So TransTime is the aerospace component manufacturer with exceptional competitive advantages. I love companies that have little or no competition, and TransTime fits that profile. The aviation sector is highly regulated, so barriers to entry are very high. So you and me, we can't just start our own airplane parts company and take these guys on. It's just the regulation's too high. They have the margins of a software company, little competition, world-class management team with an amazing capital allocation record. What's not to like?
Amazing. Well, thank you so much for your time and for your analysis today, Andrew. Much appreciated. That was Andrew Padoa from Sasfin Wealth.